Very good.
We're recording. So, hey, everyone, this is David Bradford. I'm here with Alan Connor and Todd Burkhalter. I'm going to let everyone introduce themselves. I'm the COO at Drive Planning. Under Todd, he's going to talk a little bit more about Drive, and we're really excited, Alan, that you're on here. Glad that we can hear you. And we're all like in our homes or in our virtual homes like Todd. But what we want to do is we want to talk about the stock market, and we want to give some direction. We want to give some counsel because everyone on social media is asking everyone, what should I buy? What should I buy? Which is a terrible thing to do. You don't ask that on Facebook to every Tom, Dick, and Harry. Why don't you just call your uncle who, works on cars and ask him? And, everyone's like, should I buy? Should I not? Should I panic? Should I take my money out? We're getting all these questions. Want to ask someone that we trust our clients with, Alan Connor, and get his take on this. Is it going to continue to drop? How is this different than 2008? Here's something to wait for. Really excited about talking about this, just very briefly about church and how the church and faith has actually made things worse. So we're going to jump in and answer some of these questions. Todd, why don't you just kind of introduce about what you're up to, and then you can kind of lead in with Alan and his wonderful quote from Mike Tyson.
Yeah. So we were talking before we got online, and Alan kind of reminded us of a famous quote that I think is totally appropriate for where we are. And the quote is this: it's, everybody has a game plan until they get punched in the face. And I think a lot of investors right now are feeling quite a bit punched in the face with with the COVID-19 or China virus, whatever you want to call it. The fact is, we've seen a lot of market turmoil, and so Alan and his team at NovaPoint Capital have always done a phenomenal job for our investors that work with them. And we're thankful for you to come on today, Alan, and just share a little bit about your experience of what you've done over the last few days and weeks, and also then again what you see going forward. So give us a little bit of sense of what's gone on in the market since the virus started, and kind of what do you see going forward. I know you have some unique testimony from some of our medical clients, and so share some of those thoughts with us, please.
Sure. Well, thanks, David. Thanks, Todd. So basically, the stock market hit an all-time high the middle of February. I want to say it was about February the 12th. We hit an all-time high, and we've effectively come down nearly 35% in a little over a month's time, which I've been in this business since the early 90s. That is the fastest correction I have ever seen.
Certainly for me as well.
Yeah, the speed at which the correction has happened has caused a lot of dislocation in various markets. So I'll just touch on a couple of things, because everybody typically looks at the stock market and what's driving the stock market. It started with some issues in actually in the bond markets in late February. We had some dealers that were not willing to take on additional even treasury bonds. So the treasury bond market became a little bit dislocated. That led to the corporate bond market, the municipal bond market getting a little bit dislocated. For the general public, probably people wouldn't think that's a big deal, except that leads into your money market funds, which that's usually where everybody just keeps their ready cash. And that was what really broke down in the 2008 financial crisis, was the money market funds. So we started seeing some things there. We started hearing more about, the coronavirus, and more accurately, I guess it's referred to as COVID-19 from a technical perspective. We started hearing about more cases. We started hearing about issues in China that started going on back in January. Was it going to be contained? Where was it going to go? How fast was it going to spread? So fear drives a lot in the markets. Financial markets are driven by two things: fear and greed. So what happens is, people get fearful. We're at an all-time high in the middle of February. people start looking for opportunities to take profits. So I think it starts out with some profit taking. Then you have some institutions that come in and say, well, if there's people profit taking, the market's going to go down a little bit. I'm going to see if I can push it more. And then, we kind of went into this spiral, then selling from a speculation perspective drives the market down. People who have borrowed to buy securities are now being forced to sell. That's what's called a margin call. So people are fighting that. You have margin call selling. And then it's a matter of, it feels like it's going into a death spiral. What's really been a little different this time was the up and down swings of the market. Usually if the market's up or down 1 or 2% in a day, that's a lot. In the last 2 weeks, we've had multiple swings of over 6%.
Yeah, I think we had a 9% one day, if I recall.
Well,
sorry, it was the Dow. It was the Dow, I think, that went up 9.
But that notwithstanding, today the S&P was up 8.47% today. That's a good year.
Right.
The
was a good year
had
today.
a good year today.
Yeah.
Considering the average, the historical average, depending on what time period you're looking at, is somewhere between 7% and 10% a year.
Yeah. Alan, if I can jump in,
it's a pretty good year.
May I jump in? What are some of the things? I know you guys run a very tight, and one of the reasons that we love you guys is the disciplined nature of the stocks that you guys let in and out of your portfolio, and you can always defend what you own, which I love. What are some of the, have you made tweaks? What are some of the things that you've done as far as your dividend portfolio that we typically recommend?
And in answering that, Alan, just briefly give everyone a quick review like you did with us, what your approach is, but make it brief, because we want people to come back to you when things stabilize and say, hey, who's that guy you were talking to? So just explain your approach and how you guys have changed course a little bit or had to pivot based on coronavirus.
Sure. So our flagship strategy is a large cap dividend growth strategy. What that means in short is we own large companies, pretty much comprised of that are contained in the S&P 500. And our companies have raised their dividend every single year. At least half of our companies have raised their dividend more than 20 consecutive years. The other 50% have raised their dividend 5 or more years and 10 or more years. So what we wind up with is a portfolio that is not a high yielding portfolio, but is a portfolio that generates increased annual income. So, but what we look at this in the companies that we own is we look at dividends not strictly from a cash flow perspective, albeit that's a wonderful thing to have, especially when the market's down, but it's a characteristic of a quality run company. So these companies are quality management. They grow their top line, which helps them grow their bottom line, which is why they can pay dividends year in and year out, and not only pay them, but raise them. So those are the companies that we own. In an environment like this, we go back to discipline. The last thing you want to do in this market is start chasing anything. So when we saw, we expect a 5 to 10% correction to happen periodically.
Sure.
It's not a big deal. It happens across markets all the time. That's part of a healthy market. And when we get those corrections, we typically look for opportunities to add to positions that we've wanted to own that have been a little expensive. When we saw this, and I started mentioning earlier on before we started recording that it feels kind of like the boogeyman. This is a non-financial crisis. This is a health crisis that morphed into a financial crisis.
Okay, let's stop just for a minute right there. Let's just take a minute to explain, and this is a good lead in, help people understand how this is radically different in terms of how long it's taken, like '08 and '09 took months and months and months versus like 2 weeks. How is this different when you say it's not a financial crisis, it's a health crisis that's created this? Help people understand the difference between the crash of '08 and the crash we're seeing now.
Sure. So what occurred during the financial crisis was a long buildup.
And you're talking about '08, '09.
'08, no, well, it was a long buildup. So it was building from '06, '07 into '08. There were some of us that were actively in the markets at that time that we could see that there were things being done that we didn't want to get involved with anymore. Like I stopped buying mortgages in '06, and the crash didn't happen until '08. So you could see things that were being done that were risky behaviors.
In the financial markets.
In the financial markets. What we were seeing here is we were hearing about people getting sick. And we were hearing about the volume of people getting sick and where it started to spread. Whether it started in China or whether it started somewhere else, I'll leave it to the epidemiologist to determine that. But it wound up spreading. It wound up, landing in the United States. And it wound up spreading because we are a society that enjoys traveling.
Sure.
So we have people on cruise ships, on planes, trains, automobiles, interacting with people. We are a multicultural society. So
and the economy's good. And when the economy's good, there's people going on vacation and they're traveling.
People are busy moving about. Yeah.
Without a doubt. But when you're a mutating virus, that's a wonderful thing because it means you can continue to spread and continue to mutate. So what happened was, one, we started getting a little bit of hysteria. Unfortunately, the news media, and regardless of what end of the political spectrum you're on, if it bleeds, it leads. It doesn't matter if you're on the right or the left. Everybody likes to talk about large numbers. People talk about how much the Dow increased or decreased every day because it's a big number, not because it's a significant number. Well, people like talking about the number of new corona cases every day, the number of deaths. Here it's spreading in
the cruise ship, and it's stuck out in the water.
The cruise ship and so forth. So it's all those things. It's creating, well, it creates interest for the news, but then it creates, fear. Worry.
Yeah.
And unfortunately, markets are driven by fear and greed. So fear, begets more fear. So what wound up happening is then it became how many people were going to get sick to, well, we needed to stop people from getting sick or stop people from getting exposed. So what's the best way to do that? Well, who knows where Todd is right now, but, in Atlanta, we're on shelter in place. So New York's been on shelter in place for almost 3 weeks now. I know Washington State is, California is. I know there's several other states were actually done that way. That happened the other day. Well, unfortunately, we're a consumer-driven economy. People can't spend money now if they wanted to.
They're not buying gas because there's no place to go. They can't hang out at restaurants. They can't tip their waitresses or waiters. There are no waitresses.
Correct.
These people need jobs. My sister was working at the YMCA. All of them are closed. People don't have avenues to do fitness. All of these things happen. Now you have all these people without work. They're stuck at home. They're trying to figure out how to make money.
Yeah.
And it just continues. And I had a friend of mine, Alan, who was supposed to move to Michigan. Her job was relocating her. I told my wife, I said, tell her not to do it. And she sold all of her furniture. She got rid of her downstairs furniture. And guess what? She got a call 2 days ago. We're not having you move after all. We have another friend, their pay got cut in half. I talked to a client today. She's worried about losing her job. That makes no one spends money when they're scared that their money is not going to keep coming. And that kind of contributes to that, doesn't it?
It certainly does. Now, to compound that, what started kind of coming in and what really was kind of the tipping point for the stock market itself that kind of gets lost in all this, here we are kind of 3 weeks past, was we had an OPEC meeting that broke down where they were going to try to cut supply to stabilize oil prices. Russia and OPEC got into a disagreement, and they each decided they were going to try to put each other out of business. The benefit to that is that as a consumer, the price of gas got very cheap. But shortly after that,
right,
nobody had a reason to go anywhere. So now everything's been shut down. So
where do we go from here? What are you telling folks if they call you today? What's your script? What's your line?
Sure. So the first thing that we're doing is we're letting clients know that we've gone through every single holding that we have across all of our client portfolios, and we want to make sure that we don't own any individual companies that we think could potentially go out of business.
Having said that, and I know you might say, "Hey, don't start buying now. Don't start." Some of the people are going to buy. I mean, they're like, "What do I buy? What do I buy?" What do you tell them?
What I would tell somebody right now is if they're looking to buy something, don't buy an individual name because we haven't figured out who the winners and the losers are yet. If you want to buy, literally buy an S&P 500 index fund and get the ride upward from that. You'll have broad-based exposure. Unless you're willing to actually do the homework on every single name that you can possibly want to own, I would recommend doing that. And that's what we've actually done some of that for clients where we need to get them exposure to the market, but we're not ready to start putting them into individual names. We just want to give them the exposure because we know. So right now, between the Federal Reserve, the Treasury Department, and Congress, people are willing to throw everything at this crisis. So the Federal Reserve's come out with plans. We've got two phases of stimulus bills that have already been passed. We're still waiting on a third.
You got jobless numbers coming up in April 1st. I'm worried that's going to take the market even further.
Well, to be a little more specific than that, we're actually looking for this coming Thursday, where they report the first-time jobless claims. So we looked at it last week, and we actually put out a newsletter and a blog post every Monday morning. And we've been calling and watching, saying last week we started it, where we're looking at the first-time jobless numbers that come out from the Department of Labor on Thursday morning at 8:30. Those claims typically have been running somewhere in the 213,000. They were 281,000 this week. We're expecting that number between 1.5 to 2 million.
Wow.
Yeah, I've seen the numbers go in some states from 2,000 to 80,000. I think was what I saw in Ohio. So just radical numbers.
Yes,
we're not accustomed to.
It's going to be a shocking.
Is there a possibility though that people are thinking, okay, I get it, I know why it's occurred, and so could that already maybe be priced into the models already, and that maybe be not as radical as of an end result as we might think? Is that possible?
It is, and I would like to think at this point, if you're a sophisticated financial professional and you have not forecast and you're not looking at a 7-figure jobless claim number, you're not doing your job. It should be baked in. If you're not getting it at this point, it should be baked in. So hopefully that does not create some type of panic. It's going to be a little sticker shock when we see it.
Alan, before we time out, which is going to be momentarily, talk about how church and faith has made things worse.
Sure. One of the things that we have a large client base that are emergency room physicians, and my brother specifically is an ER doctor himself. And one of the things that he had mentioned is that one night in the ER they had 21 cases of positive COVID cases. And he said it was a church function where somebody showed up that either was supposed to have quarantined or something to that effect that chose not to, and 21 new COVID cases in one night.
Wow.
I'm a churchgoer. You guys attend. You know, when you sit in church, you shake hands, you hug, you
Pass
sit
the
in very
plate.
close, you pass the plate, you sit
Yeah.
in very close proximity. And unfortunately, it's something that we're all going to have to take a harder look at going forward.
I think most, I think people have addressed that now. Certainly, large congregations like I know David and I attend. They've started going to the online services. So hopefully,
Yes.
we will see this flattening of the curve that we keep hearing about from Dr. Birx. I think we are seeing, and Dr. Fauci, we're seeing that flattening of the curve. And my personal hope is that people will heed your advice. This isn't a time for panic. I think we are seeing the cases. I don't know if technically we're seeing the cases lessen at this point, but we're seeing at least more people being tested, and now we know what to do. And with the Horizon having some new opportunity drugs out there, hopefully people will see this and take calm and just kind of ride it out a little bit, and we will see this sharp V that our president talks about in a rebound. So hopefully
I would add to that is it's not a time to panic, and it's also not a time, kind of what Alan said, he didn't say it this way, it's not a time to gamble. Don't go picking individual stocks. Alan's not doing it. You don't know, a lot less than he does. Don't go gambling thinking I've got I got a good gut feeling. Gut feelings have nothing to do with anything. If you don't know how to study an individual stock, you have no business picking those out. So
Right.
It's not a time to be stupid. It's not a time to gamble. And if you don't have cash reserves, and if you can't afford to be out without work for 4 months because you don't have the reserves, you have no business gambling your savings into something like this, right, Alan? Absolutely.
Now is time to rely on discipline and patience. We're all going to come out on the other end of this. Hopefully we'll be a more united nation than we were kind of going into it. Let's not worry about finger pointing. Let's help each other out. Let's protect our parents and grandparents and people who have compromised immune systems. But we're looking at quality over quantity at this point from an investment standpoint. And I can't stress enough, everybody needs to know what their personal level of risk tolerance is. And if you don't know it, talk to an investment professional who can walk you through that and become comfortable with it.
Well, I want to be the first to say publicly thank you for the leadership and more that you provide for our clients that are working with you guys directly at NovaPoint Capital. Thank you for the disciplined approach. We certainly appreciate it. And thank you for spending time with us today to just share your thoughts.
Thanks.
Thank you for having me on. Be safe, everyone.
So